Okay.
Can we talk now? Yes.
We can. We can make a start. Welcome, Jackie.
Thank you very much.
So I'll just introduce Jackie Waring, founder and CEO of Investing Women, to everybody. Thank you, everybody, for coming today. Thank you, Jackie, for being prepared to tell us how to raise investment for our startups.
Yep.
And I think you're more than qualified to help us with this.
Absolutely, and whatever way you'd like to format it, because Q&A sometimes is a very good way to get to the things that you'd most like to know, rather than me talking at you the whole time. But what's your normal format,
So if
James?
you could just tell us your founding story, perhaps?
Yeah, certainly. I'll tell you the story. That's no problem at all. Well, just before I start, how many people in the room here think that they may be going there in terms of seeking investment for their companies? Really quite a lot of you. That's fantastic, actually. Great. Okay, well, let me tell you, I'm going to tell you why first, because I think why is always really important when it comes to understanding anybody's story. And I can guarantee that everybody around this table has got a really fantastic why about what they're doing as well. And the Investing Woman story and me and why I did this really goes back to days when I was chief exec of an enterprise economic development agency for 10 years. And this was in the northeast of Scotland. And we could see very different growth patterns amongst female-led companies and male-led companies, and no really good reason why that should be any difference there. And to cut a very long story short, we did some quite intensive research. We interviewed face-to-face 500 women entrepreneurs. That was a pretty big undertaking. There were some very well-known names included in that research, and people who were just thinking about it and everything in between. And this is going back a number of years now, but the number one obstacle that became on that list as a reason why not going for growth, or what the barriers were for the women-led companies, was access to finance. And that's a sort of research finding that's come out many times over the years in lots of pieces of research, and I've since then worked with academics in other parts of the world, and they tend to get quite similar findings. So anyhow, if you cut underneath that and understand why, rarely is it about the fact that there isn't any finance out there. It's much more to do with, in recent years and banking crisis, yes, absolutely, that's been an issue for every entrepreneur, male or female. So, that's a given just now. But, understanding why is really important. And I think that a lot of that has just got to do with access to networks and knowledge, and actually knowing what is available for people and keeping up to speed with that, particularly in Scotland, which is actually a very fantastic environment for, lots of different types of funding sources for entrepreneurs. We're really lucky. Our colleagues in the States, a leading light of whom is coming over to talk at our conference in 7th and 8th of March, is really quite envious of the environment that we have here in Scotland for funding and for investment, and the tax environment for that. So anyhow, I ran another company in between running the enterprise organisation in the northeast of Scotland. I ran a spin-out company for 3 years. Still wasn't my business. So I spent all my time working with entrepreneurs, not having been one myself. And then 13 years ago now, I eventually went to set up my own company. And I didn't have, unlike you around the table, I kind of had a vision of what I wanted to do there, and it was more about what I was going to achieve through the business rather than actually planning at that stage to grow a scalable business myself. I mean, I was doing a lot of economic development consultancy and quite a lot of work in and around leadership, and I'd completely undervalued, frankly, the work that I'd been doing in and around actually working with growth entrepreneurs and women entrepreneurs within that. I hadn't actually recognised that was a theme as such until I was invited in the early stages of my company to tender for a contract. And that contract was with the UK government. And it was with the Department of Trade and Industry, which of course has changed its names more often than we've had hot dinners. And that's what it was then. And I became one of it was really quite exciting. We were a virtual team. So we weren't actually physically based in London, none of us, but we were a team with an administrative base in London. And I landed up leading on the access to finance agenda. So what I did there was work with a stakeholder group from the finance industry, based in London, some very senior people, and we started to get underneath what were the issues, why, and no one has since done research recently, so I don't know what the latest stats would say, but going back, this is easily 10 years, what the statistics told us was that your average female-led company sets up with a third of the capital that a male-led company does. And there are many reasons for that. And sector can have something to do with it, but it most certainly didn't explain the difference completely. And, the issues that lie behind that and being undercapitalised, impact on growth. And your speed of growth. So these were all issues that were taken on board, and started at that point to just notice how few women there were around in angel investing. And also at that stage, and happily it's changing, and even looking around the room here, be nice when it's 50-50, but looking around the room here, the number of women entrepreneurs that are going for growth, and actually succeeding in getting lots of different types of growth financing, but in particular investment, which is quite can be there in the companies that are going for that scalable growth, and it depends on your circumstances if that's right for you. But so got very interested in that. Actually, got involved in got something published actually about 10 years ago with a colleague looking at the economic potential of getting more female angel investors into this marketplace. And if you roll the clock on, because it would take too long to tell you all the bits in the middle, but roll the clock on, well, it's 10 years now, 11 actually, finally got to the stage, well, not the full 11 years that's now, but 2.5 years ago, of thinking that the time was actually right to do something about it here in Scotland. There'd been growth, quite a lot more activity in the southeast of England, with a lot more women angel investors getting involved. I've been backwards and forwards to the States a lot and working with some colleagues over there, and spent time participating in looking at programs that were happening there, things like Springboard, which is now very well known actually in the States, and seeing a growth in angel groups full stop, but in female angel groups in particular. And today now in the US, 1 in 4 business angels is female. And here in Scotland, and we've impacted this with our own group, so this is better than it was, we reckon it's approximately 1 in 20 in Scotland. Now, why would that matter? And this is quite a challenging message, and it is one I'm going to be hit straight on. This is not about equal opportunity. This is actually about market opportunity. And this is about actually, looking at the resource that has not been channeled into this high growth innovative sector that many of you will be, leading companies in. And it's about bringing in more than the money, and that's our strapline actually. It's about bringing in the human capital as well as the financial capital. And those women that could be angel investors that don't even know they could be, because they've not been in those circles, who would want to learn about it thoroughly before ever going there, and that's a very sensible thing to do. But once in there, could be not just contributing to a bigger available pot of cash for investment in Scotland, but also bringing in lots and lots of expertise in different sectors and experience and contacts and networks globally. And that's what's missing by not getting the everybody that could be and who would want to be involved in this sector. And you take that from the other side, for you as the entrepreneurs, that gives you access to a much wider network. And already it's very, very good here in Scotland, but, a much wider network of people, groups, investors and people who can add value to your company. And that's what you really want. You want the smart money. You want the people who are not just bringing the money, but they're actually bringing something to your business that can actually help you scale and grow. So that's the story why, and it's having to be very, very focused on that, because I think the message that up until now, but I think we are actually getting this message through now, might have been a challenge, is that this might have looked like we've set up a female angel group to be about equality. No, that's not what we're about. It's an outcome, and that's great, but it's not what we're about. And we see the makeup of our angel group is wholly female. Eventually, we may change that, but not until I think we've got more engagement from, more participation amongst women. And if we follow, and I've taken a lot of inspiration from colleagues in the States, you can look them up. There's an angel group called Golden Seeds in America. And they are very successful, and they're right across the States, and they're one of the largest groups. And that's a female angel group. And they started off as 100% female, but are no longer that. But then they're scale now. They're scale. So in a completely different way, in terms of our angel group, that's what we're going for. We're going for scale. And when we've got that scale, then, really, it doesn't matter, frankly, if people are male or female. It is about just opening up this arena to as many business people as possible. But to create that change, you need to focus, and that's what we're doing right now. So I'm not saying it'll necessarily always be fixed on female only right now. And the businesses that we talk to and people who come along and pitch to us, it's completely mixed. We're not investing only in female-led companies. Well, clearly what we're trying to do is encourage. And we've got a whole series of educational activities that we do. It's been bootstrapped. We've had a little bit of support from, James knows about this, we've had a little bit of support from Scottish Government. We've well and truly proven results from that. We've our first deal that we did as an angel group, because we're very young, so the first deal was only in late June, July last year. And we, as a new entrant and a just small starting point, possibly surprised the marketplace, because that was a £1.2 million deal, and that was in a biotech company, TC Biopharm. And clearly there were other players involved, but no other angel groups. We were actually the only angel group involved in that deal. We led it. So that's what the future looks like. Now, I don't really want to keep talking at you. I think it's more, you get more out of a bit of interaction here. Yes, I can give you lots of tips and advice, but how is best to structure this, James? Is it a good idea for people to start asking me questions at this point, do you think? Or, I can feed you some more, but there's nothing worse than having someone talk at you for extended periods of time when you want to get something from this. Yeah. Sure.
Mm-hmm. I was going to ask you one question first.
Yeah, sure.
Are there any, before we move on to opening the questions up to the room, well, actually maybe two questions. One is, are there any differences in the statistics from women investors? The new, and the second one, if you could, what would be your top tips for raising investment?
Sure.
After that?
Yeah, sure. Okay. Difference in the statistics. Well, it's really quite interesting, because if you look at the States, and 1 in 4 angel investors are female. Interestingly, about 1 in 4 businesses pitching for investment are female-led in the States. Now, that's distinctly higher than here in Scotland in particular. Maybe other parts of the UK, the difference is not so large, but in Scotland, although it is changing, and I think it's changing quite rapidly, which is fantastic. So that would be, do you mean in terms of the success, James? Yeah.
I've heard you talk before about the influence that your female investors brings to startups and how that helps the startups to grow.
Yeah, I think one of the differences, and interestingly, but myself and several of our angel group members have participated in some research that's being done right now about differences, or if indeed there are any, between male and female investors and how they make decisions. And I actually got it fed back to me by someone I was talking to at whatever stupid o'clock time it was last night. I was making the many phone calls to various people that we've been talking to, and about how, and this is coming back from the entrepreneur, about how we had spent more time actually speaking with this individual entrepreneur and trying to find ways to help her in her company. We're limited by our own time and the capacity that comes with it. But I think you might find, and I don't want to make sweeping statements here, because there are some absolutely phenomenal male and female investors here in Scotland. It isn't about gender in that respect, but I think within our own group there is definitely a dynamic where the female angels that are in our group, nearly all of us have been entrepreneurs. We've got several members of the group who have built pretty significant companies and cashed them out, who are maybe still involved in their business but doing really well. So we have, lived it and been there, in terms of really understanding the entrepreneurial journey. But it's maybe more a very empathetic kind of approach, if you like, with working with entrepreneurs, and being mindful of that, and we don't like to do the power games at all. And I'm not saying that other people do, but another one of our straplines is it's about parity, not power. So things like Dragon's Den, and it's for telly. It's good telly, isn't it? But the way people are treated, no need to do that. It's not about. It's a different dynamic. It's about a different dynamic. Yeah.
On Dragon's Den.
Yeah.
I don't imagine companies like that.
No, not at all. We don't. There's no need for it. I mean, that's for telly. It's maybe not reality, but so it is about relationship. I think we would be accurate to say we take a very much a relationship approach. So, it's about wanting to get to know the entrepreneur and seeing whether or not we can help people find connections, networks, and on a completely voluntary basis. So this is never a given, but on a voluntary basis, some of our members are actually giving time to people that we've seen who clearly have got the drive, have got the potential, have maybe put such a lot into this themselves already, and maybe just need a little bit of support, a bit more kind of nourishing, if you like, in terms of working in and around areas that perhaps within their own area of knowledge or the team that are building. I could give you a classic example. We've got a lady just now that one of our members has spent quite a bit of time with already. It's, her business potential is fantastic. She's got a really, really defined niche. She's got a product that's patented. There's a definite marketplace for it. It's a fragmented market at the moment. She has an opportunity to come in there quite, in a really significant way. But her lack of experience is much more in the financial side of it and structuring that. So we've got someone in the group who's really well qualified and experienced in that area, who is actually giving a bit of support to that company here and now to help her just kind of get that properly structured before taking that further. And we'll welcome her back any time in front of the group to try and get that to the next level with investment. But even if it isn't us that does the investment with her, we would feel like that was a good use of our time. So, it's not just about doing it to then do the investment ourselves. We're quite happy to try and help people on that basis, to be ultimately get what they need elsewhere. We're just more interested that people actually get what they need. Now, I don't know if that makes us different, because I'm sure there are others that are doing that within the community as well. But I think it's part of our ethos. So maybe it's a little bit more defined. And I know that follows through with, for instance, Golden Seeds in the States, because I know some of those people really well. And I know at least two of the managing directors they have across the States very well. I'm going to be spending time with one of them in California at the end of March, so I'll find out what's happening there. And I know that she spends a lot of time doing that kind of thing as well. So maybe that's different, I don't know. Our colleagues here can probably tell us that story from the other side in terms of working with many people in this industry. So okay.
So I actually remember from one of our last conversations, I got a sense of the informal processes that go on in fundraising as well as the formal. So could you perhaps just talk to that?
Yeah, never miss an opportunity to get in front of angel investors. But what I would say is, before you do it formally, be really well prepared. Don't go half-baked. We do frequently see people coming and giving us half the information. Now, we're very patient and we're kind of trying to help people. You won't always get the, chances to keep coming back. And that's just a reflection of just volume and how busy people are. Because, we're a new group, but easily in a week, 6, 8, sometimes 10 new approaches in a week. and we've got a pretty limited amount of time to spend a lot of time analysing that. So if you're making a formal approach, you really need to be well prepared. But that doesn't mean that you can't put yourself in the situation where events and things that are going on, there's so many really top-notch events here in Scotland for for growth businesses, for entrepreneurs, for the angels are there. Get there, just be at them, and talk to people, and do the informal approach like that. It's like, what I would say is, you don't need to have all your paperwork lined up, but make sure that you've got your elevator pitch in terms of what is it that's good about your business, what's unique about what you're doing, what differentiates you from others, why are you going to succeed, what's different, so at least in a conversation you can stand out from the crowd. But to take those opportunities, and we probably do an awful lot actually that's informal, like James is alluding to here, because we're running day sessions. Like our next one, where's that? Glasgow, isn't it? Yes, in a couple of weeks' time, we've got a session called Day with the Angels, and 2 angels. I'll be at that one, and as will one of our other really dynamic angels in our group, and we'll run a day session there for entrepreneurs like yourself who are just wanting to get into the nitty-gritty of how do I position myself to be successful when I'm going for investment. And we'll get into talking to you about what's your business look like just now, where's the scalability there, how are you going to achieve that, what's the team like, what does differentiate you from the competition. And there's always competition. That's the other thing. See, there's always a solution to whatever the problem is. That you may have something that's completely new, but there's been a way that's been addressed in the past. So you need to really understand that dynamic and the marketplace really well. So we spend days with entrepreneurs trying to help with that. We've got, as James knows, pitch practice sessions that we help people do. We'll help come back and kind of within limited time, because we're trying quite a lot of people in one day, but 45 minutes if you're really ready for it and you go in with your 5-minute pitch. We'll help you kind of dissect it, but in the nicest possible way, and give you constructive feedback about how you can make that stronger. And it gets you in front of some business angels, and it gets you known to them before you make a formal approach. I think that's really valuable. I think that's possibly something we're doing that others are not actually. So, we happily have had, because we're actually dealing with an area where there are not so many women at the moment. We do have men on these sessions as well. It's not just for women, but because it's targeting women, the Scottish Government have subsidised that a little bit. It's not completely free, but it's the Day with the Angels is pretty low cost, and just to try and help more people get access to that kind of help. We bring in a tax specialist as well, by the way, a top end tax specialist to talk to you about how you position, or how you get your, just the mechanics of getting your pre-authorisation from the HMRC to be positioned for, usually, depending on what stage you're at, the Seed Enterprise Investment Scheme or the Enterprise Investment Scheme. I can come back to that if you like. I don't pretend to be the tax expert, but actually knowing that you need to do this if you're going for investment is something very important to know if you don't know that already. I don't want to keep rabbiting on, James. Any more
I think you've
questions you want me to?
Sure.
Yeah.
So actually, I think we'll open up to questions in the room, and if your question is being said quietly, I'll repeat it to the camera just so we can get it on film. Is that okay?
Please
Mike,
go for it, yeah.
You want to go?
Is it
Claire.
Claire?
I was wondering, in regards to an individual, I think it's hard to get investment as an individual company. And I wondered, do you help to find ways to help individuals to bring in teams who are also committed to the vision?
That's a really good question, actually. Yeah.
Sorry, what was the tail end of the question, please?
To bring in teams, and help to bring in teams that are committed to that vision in order to then present yourself with
Claire's just hit on a really key point about team. So when the number one thing that investors will look at when you present your pitch to them is you / team first, and then second your business idea. So it's the key thing that you need to have nailed by the time you go for investment. So it's a very good question. And because we're talking to people before necessarily they're going live with their actual pitch for investment, yes, is the answer to that. It's not that we don't provide and can't provide any kind of headhunting type facility to help you build your team, but what we will do is maybe talk you through some ways that you can go about doing that, because the biggest challenge that you have in that early stage is we don't have money to pay people to be on that team. So how do you get people engaged? And there are many ways. Like we had I spent a whole half day yesterday with a company that, touch wood, we might be backing, and this is a really interesting one because it is a spin out. There is some medical research and diagnostic involved here, and they need people to fill some gaps on their team. So, for instance, commercialization of that diagnostic. They've got the scientific team, who are just second to none, but the commercialization not within their team at the moment. So the way that they're going to do it is they've already identified their chair, and in this case, now this is probably maybe a bit more specific to their industry, where you can do this in a more in the medical environment where the company's being incubated. It's really within university just now, but where they will actually go out to seek a CEO, and the CEO in this case will be very focused in on that business, the commercialization of the diagnostic. So that's slightly different, I think, from, you as the entrepreneur driving the company. But it could be that you might identify, right, what I need is someone who can help me take this international, for instance, right? So what you might still use the same technique, but it might not be a CEO, because you presumably would be the CEO, but you might want someone on your advisory team, or potentially on your board, who could help you fulfill that function. And then the next piece of advice is to make sure that you're working with good lawyers, definitely, because it's really critical that the contracts that you draw up there with people that you bring in are very secure. So for instance, you might agree with that person that should the business take off and you get the investment, so it can be conditional on that. So there's no money going out until such time as you've got that. So it's that gets you around the chicken and egg situation of not being able to pay them. That you might build in, for instance, that, and it's usually can be linked to the exit. So at the point that you either sell your company, you might still be in it, but the exit for the investors, that that person that you've brought in on that basis perhaps gets a percentage of the the equity on the sale. Now in all probability, if they're spending a lot of time in your company, they're going to need some income beyond that, but that's all part of a negotiation that you have with them, that you would absolutely have in a contract. Yeah. But you can go and broach those conversations with people that you and can find out through networks and find the right people. So it's about finding the right people first. And you hit on a really key word there with who. Sorry, did you use the word culture? Or is that in my head? No, that was in my head, wasn't it? Sorry, tell me again what it was you said there. If you don't mind repeating that to me again. People who share your vision. Sorry, wasn't it? Yeah.
To that vision.
Yeah. Exactly. Yeah, and actually, in many senses, when you go out to try and find people like that, you're pitching to them. So you being passionate about your vision and getting them passionate about it as well is that's the acid test, isn't it? Because you do want someone that buys into what you want, and if they're lukewarm about that and it's just another role, they're not the right person. That's what I mean by the right people. They've got to have the right skill sets, but they've also got to share your passion. And if they're playing a really pivotal role in your team, you've got to make sure that you get that. So it's not that's a tall order, but there are people doing it every day, so it can be done. you know.
We were talking
So,
earlier on about
Yeah.
actually crafting a vision statement for the business, which obviously helps you to sell the why, the purpose of the organisation, what you're trying to achieve. And,
Yes.
you
Absolutely, yeah. Your why that's the compelling story. That's the bit that people buy. You know, it's that classic quote, Simon Sinek. That's it. People don't buy what you do; they buy why you do it. Apple understand that, and they use that in their marketing very well. So yeah, it's that's so knowing what is it that drives you.
I think it's just how do I put it out there? Who do I
Yeah.
put it to?
Talk to lots of people, take every opportunity you can, and through the networks you find the people who can help add value to your business, and then eventually, I'm not saying this happens overnight, but you do find the people that you think, right, okay, that's someone I really would like on my board. I had the privilege of being out in Jordan in October, working with 20 top young female entrepreneurs from America and 20 top young female entrepreneurs from Jordan. That was an interesting mix. This is a big Open Hands initiative. It's backed by it's actually backed by Obama. That was very, very inspirational, and I have to say that the American women, and of course they've got the benefit of being surrounded by really inspirational people in Silicon Valley, etc., and they were masters of the game in terms of the team, and having the right people on their boards and as advisors, because remember your advisors are part of your team as well, so that adds value to a proposition that you're taking forward to any angel group. If they see that you've got people backing you who are well known in the industry, who have got respect of the industry, who can open doors for you, that's what you want.
One of the things that Mike Clouser and myself do is we run Co-Founders Lab Scotland once a month. So you're more than welcome to come along to that event and actually use the online system to try and look for a team member. But maybe we could go back a little bit, Jackie.
Sure.
And when investors are looking at the team, what do you have any? I mean, what can you tell us what you're looking for? What makes someone stand out to you?
Well, I mean, no proposition is ever perfect, so don't think you have to be perfect. What's much more important is actually understanding where you do have the gaps and not trying to ignore them, just being really upfront about it. So I'll tell you what is impressive. It's when people come in and they pitch and they say, this is my team, this is this is who I've got on my, usually, there'll be advisors, they'll be, on a voluntary basis to begin with, because you can't pay them. That's normal. But you've got them hooked in somehow, so that if things go forward, they will be properly part of your team. But when people come in and they say, I know what's missing from my team just now, I need X, I need someone with a really strong finance background, say. So what I am looking for from, isn't just the investment. I'd actually really welcome someone coming in, or a group coming into this to invest in my company, who can perhaps place someone on my board who can bring that kind of expertise that's missing. So it isn't about being perfect before you go, but it is about really understanding where the gaps are. So it's looking about, what are the skill sets that I need to get my company to the next level and beyond, several levels beyond. And, do I need people who know how to internationalize a company? Do I need people who just have, really hot on finance? Do I need people that, understand, are experts in, your legal advisors, experts in IP, but maybe people within your team who have, succeeded in patenting before, have got new products to market, that kind of thing. It could be anything, because it's different from every business to another, but it's about just you understanding what you need in that team and having the vision to look ahead and say, well, just here today it's just me, but down there, that's what I need, that's my dream team. You don't necessarily know them by name, but you know them by what they would be adding, what they'd be bringing to your company. Yeah.
Okay, so we move on to another question. Anybody? Mike?
Yeah, well, thank you very much. I actually was going to talk about that real quick, about the team side.
Sure.
I think it's really crucial.
Yeah.
Just as an entrepreneurship researcher in my past life. So, basically the literature shows that there's a positive correlation between venture success and team size, team size.
Yeah.
And the second piece of data that we've known for years has come from the Global Entrepreneurship Monitor, the GEM, which is entrepreneurship research, which basically shows that women, have less access to capital, they raise less capital at the beginning, and that is the data also shows that they tend to form smaller teams, and the correlations made between those two factors. So the larger the team, the more access to capital, and that's on a global basis actually.
Mm-hmm.
So I think that's really important. But I also wanted to segue.
Sorry, but did you say the smaller the team, the more access to capital?
No, the smaller the team, the less access to capital. The larger the team, the larger founding team correlates to higher venture success and access. And part of that has to do with access to capital. That's because of networks.
Yes.
So just
Does
pure,
networks.
Time and effort and labor, and how much you can achieve in the early stage. But so the thing I wanted to kind of add or suggest or ask you about is, as also having done some education. For example, I ran a financing residential for the Girl Geeks Network.
All right. Yes. Great. Mm-hmm.
I've got a few co-founders now that are women in different ventures. One of them is involved in the Vanessa Project. She heads Vancouver. And what I kind of find to be, just anecdotally, what I found over the years is that there's a big gap in the as you talk about knowledge and the understanding of the early stage mechanisms of finance, and in particular securities. Just starting with a simple concept of debt versus equity and how they work. So I'm talking to a woman founder right now, I'm helping a bit, and just she doesn't understand the difference between equity and debt and how those work. And then beyond that, all these concepts like how stock options work, whether they're exit only, how classes of shares work as the venture proceeds, how vesting versus issuing versus outstanding shares, and that has a lot to do with the team too, about how to use those mechanisms to incent people. So for example, what we did recently with one of my startups here is to standard 2-year stock options agreement for advisors for 1%, vested over 2 years. So I think that as you talk about the knowledge gap, I think that's a big thing. What I found over the years, just quite honestly, like when I talk to women co-founders about it, it's like a lot of times they're like, well, I don't know anything about that. You can handle that. Or, I don't know anything about that. Like, that's not my area. I'm a designer. But if you're a co-founder in a team where you're building a business, like that knowledge is really important to have. It also gives you negotiating leverage as well when you go to talk to angels and investors. Because the reason why the valuations are so screwed up is because angel investors have a lot more knowledge and therefore power versus entrepreneurs. There's a knowledge gap. So the more knowledge you have, the better you are negotiating terms.
Yeah, absolutely. You hit on a key word there, Mike, the whole power side of things. We would be very transparent actually about how we would go about those negotiations. That would not be used in that way. I think, but what Mike's saying is absolutely right. It is about get the knowledge. Or, let's face it, actually male and female. I've run growth programs for a number of years now, all over the UK, and some of them mixed, some of them female only. And actually in both, the sessions that you have the biggest dropout are the days that you do finance. Suddenly everybody's got something pressing that day, or ill, they just don't like to do it. So, I think it's a bit of a mental block for many people, and it's about, you've got to unblock that. You've got to unblock that in your business. So the knowledge needs to be there. Now, it doesn't, if you can, within your team, I think you need to get to a level of knowledge yourself. But, if you think, well, I'm never going to get this, really as well as I'd like to, then make sure you've got someone in your team that does. You need it within the company, that knowledge, absolutely right. And don't go too soon to investors either. If you can get your business to the stage where you can finance through what you would call non-dilutive finance. So that could be debt, that could be grants. Again, if you're in any area where you're innovating something new, there's almost certainly a grant that you can go for there. I'm not suggesting that you always will want to, because some of them can be a very long and painful process, and you have to balance up whether or not the time that it takes with that is actually worth it. But if there are opportunities like that, then look at that, because if you can get your business further down the road before you get into negotiation for investment and selling equity in your company, then your valuation is higher.
Of course, also if you're getting money from your customers, you're generating some sales.
Quite, yeah. It depends, so many businesses that need investment, or it's pre-revenue, it's before you've got to the sales point, and that's why you need it. So if you're in the fortunate position that you can get revenue in the meantime, fantastic, because that's really going to, elevate where you are. Yeah. Mm-hmm.
And I think that as soon as if your business is starting to generate some revenue, that helps you to get that dynamic worked out within the founding team as well. Because obviously you've got some cash, and it's a real process. Yeah. Are we going to invest it into the business? Are we going to distribute it amongst ourselves? And that's a useful conversation. But I think what Mike and Claire said, the founding or bringing the team together is a difficult process, and then you have to decide how much equity each of you are going to have, and what's an equal split. It's a tough one.
Leverage, which is what's going to
Yes.
So, should we move on to another question? Maybe someone on this side of the room?
There were a couple of hands earlier on.
Well, one of the things you said earlier was, how do you identify, you've got to get, for instance, good lawyers. How do you identify the good lawyers from the lawyers? I mean, I spent this morning, before I came here, essentially vetting a lawyer. All I found out from that experience was the lawyer knew more about the law than really feel delighted. But that's not really the threshold.
You really should ask around, and I'm sure our legal colleagues here would back this up. That you ask about in networks. Do ask around. Don't be scared to ask direct questions. I'm sure that our legal colleagues would welcome this. If you're dealing with, let's say you want someone to help you. I mean, if you're going into a really specialist area, that seeking a patent or whatever, you really wouldn't. You wouldn't go to someone behind the counter in boots to get a diagnosis for a medical diagnosis. You need someone who's a specialist in that area. So first of all, you find the specialist that's relevant to what you need. And then you ask them direct questions. How many patents have you done? How many successful have you launched? Get the feedback on track record, and judge from that. But again, if you ask around enough and you're networking enough, you will quickly hear who's out there that's good. And my advice would be is go for the best, even if it costs, because it will cost. It will cost to get the best, but you should. That will be money well spent if you get the right people. Doesn't mean to say that you can't be. I'm going to love me for this, but you can't be. Fairly exacting about what you want for that money. And in fact, the more you ask for that, then the more people respect you for that. As in, do negotiate fixed fees. Don't leave it open-ended. And understand exactly what the scope is of the support that you're going to get within that, because it certainly can run away, as it can with any kind of professional service. It's not limited to legal support. But so go for the best, ask around, go for the best, go for the specialists in what you need. And if it's more generalist that you need, fair enough, just, who out there is good. And it doesn't always have to be the biggest players. There are people, there's a gentleman that we've used to do, sorry, I was late. Gentleman that we've used to help us with financial due diligence. That's just a small practice, but he is superb at what he does, and he's well known for that. And so it's not always about scale, but it is about people who just do a good job, and you want to be sure that you're getting that. So don't be scared to ask around and test that. Yeah.
Okay, another question maybe.
Just
idea of building a team.
Yeah.
As somebody, if you're hiring a consultant, could that be classed as somebody who's part of your team?
Just repeat the question, please. So,
Oh,
can a consultant be part of your team?
Oh, right, yeah, sorry. Yes, but you would have to be quite careful about the contract around that, so because it really does depend, doesn't it? Because it could be someone really niche specialist area, and if they're going to be an important part of your team and helping you grow this company, you want them to be, committed and tied into working with you and not splitting their time. It depends how much you need them as part of that whole team, but you don't want them spending their time with 50 other clients and not having enough time for you. And that is something that it's certainly not it's not necessarily a negative, but you would have to be very careful about how that there again, taking some advice about what sort of contract would you want to draw up with them, in terms of their commitment to working with you, and also definitely if it's it depends how sensitive it is, the information that you're asking them to work with you on, non-disclosure agreements and such like, not being able to take ideas and take them elsewhere, which you would have within any key employee contracts as well. And all of these things are checked as part of a due diligence process with investment, because those are the devil is in the detail, as they say. Those are the little things that things can fall apart on, if they're not nailed. But this is where having the experts round about you to help advise on that is so important, because you're the founder. You've got so many things that you're trying to do to grow this company and drive it forward. You can't be an expert in everything, and you don't have time to deal with everything. So you need others around about you can help you nail that kind of detail and give you the advice on it. And just great if you can haul in favours, and you can do it in lots of ways. That's really bootstrapping it to begin with. Lovely. At some point, you'll have to get the professionals involved if you're really going for that scale and that growth.
Jackie, do you have any insight into how many deals fall through because of the due diligence not revealing problems?
Gosh, actually, that's a good question. I don't know the stats on that, to be honest. I've not got them to my fingertips, and I don't know if anybody in the room in a better position to know that. But
Not really, they do.
But they absolutely do.
Yeah.
Well, they do. I mean, we had one that did. We were 48 hours from closing a deal. I'm not going to mention any names or give away anything here, but 48 hours from closing a deal, £250,000 in the bank, waiting for the final transaction. And I hate to say it, but it was the entrepreneur that made a major change, to the point where it just wasn't going to be physically possible for that company to deliver what the agreement was based on. It was a very material change, but that wasn't quite due diligence, but it was all part of that process. That was the very end stage of a due diligence process, and the deal folded because of that. But that's the only one that we've had.
I've seen them where it's just the investor loses confidence because when they're looking through all this information, they realise it's not compiled very well, so what's missing, what information is there that's not quite precise, why is it estimated, and who are these people that have been involved in the business but don't have contracts and are they employees, are they not, who's going to come out the woodwork, and without having the information formatted properly so you can see that somebody who's put this together knows the business, knows what they're doing, there's nothing to hide, you can lose confidence there. And somebody just walks away. I've seen it happen closer than 48 hours and quite often. Not too
just
often,
on the subject of stats, the US version of Dragon's Den, somewhere between 2/3 and 3/4.
How much longer have you got?
Right till 2. Okay. Yeah.
Sorry, can you repeat that?
In the US version of Dragon's Den in season 1, somewhere between 2/3 and 3/4 of all the deals that were made on screen fell
through afterwards, yeah. And same in the UK.
Is that true? I would have thought that was higher than I think it just depends on maybe Yeah, I mean, therein lies the dangers of doing it for telly. I suspect, I don't know because I don't have these stats, but I suspect that's higher than in reality. I mean, most of the other groups that I know of, they certainly do, they do happen, and fairly regularly, but I wouldn't have thought the percentage was as high as that. It wouldn't be as many as 1 in 2, even less than that. I mean, I think, until such point as it depends at the stage that, going to a term sheet, which is the outline agreement, not in detail, but just sort of heads of terms, too quickly can be a mistake. It's a good idea to actually have a mutual understanding and agreement of all the what will then happen afterwards, and all the main points of the deal before doing the term sheet. Then there's less likelihood of that kind of thing happening, and it's also about when the due diligence process is about it's really just checking that everything's there and there's nothing that you've forgotten about, and dare I say it, nothing that you're deliberately hiding. And that does happen, when people will deliberately hide something. Don't ever do that. If there's anything that you think, oh God,
what kind of things do they hide?
There's something that's happened in the past that I don't know. It could even be that you've had a business failure in the past. Well, that doesn't mean that you wouldn't be investable, not at all. And that's happened to you. And people try to hide it because they think it, and it's possibly with the best possible intention of thinking, well, I'm not going to get this deal if I let it. But what lies behind that is actually, it's very human. It's trust. It's just trust. That's all it is. If you can don't worry too much about this at the moment, and just keep thinking on the top level about relationships and trust. If you're really honest and upfront about things and say, well, look, or you even say, well, look, I don't think I've got that yet. I realise that's something that I need to get in place, be it a contract that's missing or something, then you just do something about it. So don't let that get in the way, and don't try and hide something that's missing, because that will get uncovered at some point, and that that could be enough to make a deal fold. But that's way down the line. I mean, I think at the outset, you just want to focus in on building the good relationships, on selling your vision, thinking about the team, absolutely thinking about what's your business model that you've got here and how you're going to get that scale. What does the revenue model look like? How many stages are there between, offering whatever it is you offer and the money coming in? And the more complex that is, then, the more opportunities there are for things going wrong. So sometimes people change their business models when they start to look at this, and they start to see that, they don't have to do all of this massive amount of effort to sell what they're doing to lots and lots of different people. There might be channels that they can use that will get them to many, but they're operating through just a few channels to get there. So it's just it's take all advice you can get, take advantage of any programs that are out there that are giving you access to that kind of support, soak it up, use what you can from that, and then when you need to, that's when you start to pay to get the proper professional support round about you. Yeah.
Could you give us an idea of how long the process might take from the first pitch to the job?
Very much dictated by how well prepared you are, but and how complicated things are. So the deal that we did in the summer is a Japanese investor, and Japanese don't move quickly on things. Mind you, I mean, we did actually manage to, amazingly, we probably broke all records actually, because from term sheet to doing the deal we did it in 6 weeks, but that's a bit of a record, and that's actually not normal. It's certainly not normal on that scale, but they were so well prepared, really well prepared, and the company themselves had. I mean, it's a lot easier when you've got a significant team already on board, and experts on board within the team. I mean, they had in-house legal even. So there was an awful lot of the stuff that most people wouldn't have normally there. So maybe not the norm. I would say that three months is probably average. In fact, that's an optimistic average. Probably 3 to 6 months I would allow. And if you've got a complex situation, more. Sorry.
So that was not a startup, though, was it?
No, not completely. But they weren't. But it's pre-revenue. Mm-hmm.
Pre-revenue.
Oh yeah. Uh-huh. But the biotech industry it's got years of pre-revenue, so that's a bit of an exception. Yeah. Well, yeah, in trials now, but yeah. Yes.
Are there any hot areas of investment in Scotland? And if you're not in biotech,
oh, I know. It sounds like it's all biotech. It's really not. It's just that we definitely do have a real sort of cluster of, really strong, biotech, the institutions and lots of world-leading areas in Scotland, which is phenomenal. But technology is, Edinburgh in particular is, I believe, second to Cambridge only in terms of tech startups. So technology, very much so, lots of support being focused in on that. So great for tech, great for biotech. But I just think that there are some areas that people think, oh well, for instance, I'll give you an example that retail might not be an area of investment. There are some very, very clever models out there. It's just all about scale. It's all about scale. If you can present a good enough opportunity with lots of scalability and you're well ahead of the game, so there's not somebody about to start doing what you're doing as soon as you go public and take your marketplace away, then to be honest, most sectors are investable. There are some exclusions for getting tax, the tax benefits and they're for you. I mean, sadly, of course, our legal colleagues and our accountancy colleagues in the professional sector, they can't get access to registration as seed enterprise investment scheme or enterprise investment scheme. So professional sector is excluded from it. But I'm not the tax expert, but I think it's sorry, I'm trying to get the words out. It's not coming to me just right now. Anyhow, you can see it on HMRC website. But if you're in any sector that's got some, or any business that has got some scalability and growth, then there's no reason why you might not be attractive to investors. Finding the right investors that will look at your sector, because some groups will specialise and only look at specific sectors. We don't at the moment. We're completely open, but we're by no means, we're still a young and relatively small group. We've got aspirations to be way bigger, and we will be way bigger, but we're not yet. It takes time, so we've got our limits on capacity as well, easily. But between all the groups in Scotland, I mean, you've got the highest concentration of investment per capita, per head of population in Scotland anywhere in the world is here. So it's probably the best environment anywhere to get angel investment.
Do you know why that is?
The tax schemes have been a great benefit in the UK, and Scotland has just been very organised about how they've gone about this. So you have, at the last count, I think about 23. I'm not sure if that's still the number. 23 angel groups, I think, in Scotland. Link Scotland, LINC. You can find, listings of who's out there and if they've got any specialisms. And Young Company Finance as well is another publication I'd recommend that people look at. You can get it online. We've actually got them coming along to our conference on the 7th and 8th of March. Along with lots of other specialists. They can highlight lots of different types of funding that's out there, not just investment, just not the be-all and end-all, and it's definitely not right for every business. It's only a relatively small percentage of businesses that, investment's really right for you. I've lost my thread now. James, remind me about that question.
Well, why are there so many angels?
Why so many? Right, okay.
Scotland?
I think also Scottish Investment Bank and something called the Co-Investment Scheme has had a major influence on that, because it's gone through a state of flux. It's less clear at the moment, but there's basically been a pound for pound matching, more or less. Different percentages in some circumstances, but pound for pound matching of private investment going into companies, and that's through SIB, which are part of Scottish Enterprise, and there's money from Europe basically that's helped to make that happen. So, and it's just been a very well organised and well structured industry here in Scotland. So basically the Scots have kind of done it better. Even compared to, I think it's changing in England now too. It's getting more structured as well. But this, if you look at the stats per capita, We're higher than England by a long way, actually, and we're like 10 times as high as some other countries in Europe.
And I think that situation has been instrumental to us having 2 unicorns in Edinburgh. And I think we're 3rd in the world for unicorns per capita. Unicorns. That's business over.
Billion, yeah.
Anybody else have another question?
Sorry.
Is there anyone else?
Well,
Two
if you
here? Yes.
and then June.
On both. I'm Rad Stark from Connectin. We are
Hi.
a Glasgow-based mobile connectivity startup.
Oh, great.
Following up on the discussion around more angel investments in Scotland, do you think it's also true for a bit later stage VC stage of investment, or is it more at the angel?
It's a really good question as well, actually. The VC, I'm sure, given everyone here is going for growth, you're probably familiar with it, but venture capital is on a much bigger scale than angel. Angel investors come in at the early stage and take the biggest risks. Venture capitalists certainly do take big risks, but generally, the businesses are far more proven by that stage, and there's traction, and there's been they're further down the line, and it's much bigger sums of money. Would be very unusual to be anything below 1 to 2 million. I think. I don't know what you're seeing at the moment. Yeah, and I think there's. I am not an expert, and I don't have my hands at fingertips on stats on that just now, but perception, just in some of the conversations I'm seeing, I think that, do I be right in saying there's a bit more VC activity happening in Scotland just now? I think there is.
I think it's getting better, but still could do with a bit more.
Yeah, and actually, one of the things that's always a difficulty is, and if it's a difficulty for the investors, then it's going to be, it's a difficulty for you as well, is that getting a good working between maybe angels in the early stage and the VCs coming in afterwards, because there's been lots of experiences with early stage angel investors who've taken the biggest risks just being completely and utterly diluted by the VCs coming in. It's just it's not an easy step from, unless it's buying out perhaps the early investors.
Ian Ritchie's written a paper on ordinary preferential shares as part of the
so absolutely, there are some really experienced people in this in Scotland who, are real experts in the area. But it is interesting. We've seen and had conversations actually with some VCs that are very keen to do more in Scotland, and who are in particular sectors, and maybe willing to have more collaborative approaches with the angels right at the early stage, so that there's kind of a pathway. So some signs of that, but it's probably quite niche in terms of sectors. So it's there, but it's the big money. It's when you're at the couple of million plus probably funding requirement. So yeah. Mm-hmm.
I think there's a good availability of finance early stage, but there's a potentially you're getting better, but there's a bit of a gap. Say, we see companies in the Silicon Valley get quite a very different valuation, very
totally different. Yeah.
Yeah, but then that gap is bridging more so in London as well.
Yeah.
And, just had another query actually on the topic of due diligence falling through.
Yes.
And it's normally a few months, 3 months, as you said, a process from say heads of terms to a shareholder agreement.
Yeah.
Is the company / the entrepreneurs normally paying for the due diligence process, or does the investor?
No, I mean I can some idea about how it works with others. It's actually really good to have these conversations, because I think one of the things that I've seen happening is that people have not understood, or maybe not had these conversations up front from day one about what's it cost to raise this money, because it costs to raise money. And I know that Link Scotland will tell you to allow 15% against what it is you're raising. to cover all the costs that come along with that. And that's probably quite a fair percentage to apply. It does vary greatly, so it's not a given. But and what you should do is incorporate that into your figures, so that it's so that you're not left with 15. Well, it wouldn't be 50%, but you know what I mean, 15% less, and it eats into what you need for the company. So you need to know that up front, and that's probably a good rule of thumb. But so ordinarily, what you look at is a deal fee. So it's a percentage of whatever it is you're raising. And in our group, it's 6%. And that's fairly average. It does vary a little bit, but, that's pretty average. And what that is a recognition of is that the costs that actually come along with doing this. And that's cost for the investors as well. So that's what it's in recognition of. And if you build that into your what you need to get what, to get to where you want to, then you know that up front. You've then got we in our group, certainly what we've got, we would negotiate the legal due diligence. It comes within the legal fees that lawyers are doing. But that also, it sounds awful. It sounds like, oh God, the entrepreneur pays for everything. To a certain extent, you do. Because legal fees are paid by the entrepreneur within the company, but this is you just need to know this, because this is absolutely the norm. So you've got your own lawyers, you do pay the legal fees of the investors, but within that, we certainly have in our agreement with our angels that if there is additional due diligence that we feel we need over and above what would ordinarily be covered, financially and, with the lawyers, we actually pick up that cost ourselves. That's a personal thing with us. Now, you might not find that with every angel group, but, because we're trying to do this in a way that's fairest possible for the entrepreneurs, but it's just a reflection of the level of work that goes in. The more, it's all about risk, it's all about evaluating risk. Therefore, the due diligence really is an important part of the process, and someone needs to be paid to do that, basically. People don't do this for nothing. So
there's also the cost in getting SEIS and EIS approved as well.
Well, yeah, I mean, you can do it yourself. You can get your pre-authorization letter from HMRC for your company to be, position you to say, yes, if you go ahead on the basis you've described, your company will be approved for Seed Enterprise Investment Scheme. But again, I would say it's sensible to use an expert to do that, because there are lots of loopholes. Yeah. Is that how much it costs? Yeah, sorry.
Well, there are other accountants.
Yeah. And maybe you can get access. I don't know. I actually don't know the answer to this, but some of the programs that are out there helping companies, you might be able to get some help towards those costs. And certainly, if you're on the growth pipeline through Scottish Enterprise, correct me if I've got this wrong, but I think through SE, companies on the growth pipeline can get 50% of their professional fees covered to get this kind of support. Aye, so you've got the cash flow implication there. Yeah, absolutely. Mm-hmm. I don't know if it's still 50%, so don't quote me on that. You might want to check that out, but you can get some help towards that. But I think it just comes down to the fact that, you just don't go there unless you're really serious about wanting to get investment, really going for growth, because this is not a cheap process. And it's just a reflection of the fact that angel investment is the highest risk form of financing. So therefore, everything possible is done to mitigate risk. You never eliminate it. You cannot eliminate it. You mitigate it. Mm-hmm.
Do you mind? Sorry. Do you mind if we go to June's question?
No.
Yeah, June. Sorry.
Yeah. Sorry. I'm taking a step back, asking about if you're not at the stage looking for angel investment, but for a grant,
Mm-hmm.
Is it very different for young people starting out? Like, I'm thinking of my daughter who's going to be working in fashion and retail. Is there a lot more grants available for young people than
My goodness.
older?
Now, I would have to confess that I'm definitely not up to date on my knowledge there. But Prince's Trust is the obvious one. And is that still up to 30 now, age 30? So
it certainly
yeah,
benefits younger.
yeah.
There is also Prince's initiative for mature enterprise, which is for people 49 and a half.
And half.
Ah, they've done it. So I remember speaking to them years ago about that. Yeah.
Well,
Oh, good. I'm really glad to hear that. You know, I haven't checked that out. That's really good to know.
48's not great then.
You haven't got long to wait. Don't rush to get there.
I think it'll probably be a good idea if we actually call an end to this part of the meeting. Jackie is here till 2:00, so you can have a one-to-one chat with Jackie before she goes if you're quick.
Lovely. If you don't mind, are there any sandwiches around the room? Sorry, I have no lunch.
Well, I know there are tonic tea cakes.
All right, that's all right. I can, because I'm going straight to several other meetings from here. But
so please join me in
much.
thanking Jackie for her time.
So is that all there is? Don't worry about it. It's fine. Yeah, thank you. Well,
Laura might help you out.
Thank you everybody for lots of great questions actually. But yeah, I'll hang around and I'll stand up if you don't mind and wander around. And
great, thank you, Jackie.
Yeah, you're welcome. Thank you. Yeah, it seems a bit overwhelming because there's so much to take in, but don't let it overwhelm you because, you know, if you can